Hello traders, this is Rich from Tradesight. This is the market preview for Friday, March 14th, 2014. We had a pretty good day to the downside, and we definitely profited from. We had a really big day in Tradesight. We had a huge future short. I got price line short fairly early and made a bucket of handles on that one. But really one of those days when you really need to be able to play both sides of the tape and be willing to engage the short side when the market tells you it's time to. So what we did on the day was we lost 21 handles on the ES. We lost 55 on Nasdaq and about 2.25 on the broad market side, represented by the Dow Industrials. Bonds were a kind of a flight to safety, up $1.44. Gold not so much. Gold was higher on the day, but it wasn't that big squeeze. It was definitely the bond market that was feeling the flows today. So without further ado, let's move on and take a look at the individual futures charts. All right, first up, we're going to take a look at the ES contracts. First thing, public service announcement: the ES futures are going to be rolling tomorrow. So the June contract, the M contract, is going to become the front month. So we're in the process of the rollover, so that's going to cloud the levels a little bit, but nonetheless, it's going to affect the intraday stuff more than the dailies. So let's talk about the daily levels here. We did have this move back down below the 10 EMA. This is actually the first settlement below the 10 EMA. So even though we're starting to get some distance to the downside here, we need to qualify that, and I expect that it shouldn't be too hard to do. All we have to do is take out Thursday's low. We used this 8-ace level at 1875 today for resistance, and clearly the buyers there were rejected and overwhelmed by the sellers. We took it back down to this 6-ace level at 1843.75. Keep in mind, this is going to be an important level. We did fill this open gap, as we talked about last evening, which was a definite target, and it's also the origin of the breakout from this high very early in the year. So if we do lose that level, the next thing that's going to come into play is going to be the 50 DMA and then the 4-ace level at 1812.50. If we roll back to the top side again tomorrow, this 1875 is going to be the number to watch, and then if there's a huge surge, then the swing high so far in the move coming in about 1884. Moving on to the Nasdaq side of the market. Nasdaq side of the market has qualified as short-term negative. We've got a settlement below the 10 EMA, and we did close one tick or trade one tick below the low of that bar, so we are already short-term negative here. Levels to watch here: we did match this previous low here at 36.38. If we roll down below that, we're going to have a little minor support here, a little bit lower here, which was the origin of this previous breakout here in late January. If we lose that, then we're talking about this the 50 DMA, where that lines up with the 6-ace level, and that should be more important support. Below that, then we're going to put the static trend line into play down here, but let's not put the cart before the horse. I've got the volume up here just because we don't usually look at volume in the future so much, but we did see an uptick in volume. It's the highest volume of the week, in a week, and we are doing so on a pretty decisively bearish candle. All right, so let's take a look at some of the market internals. Here's a look at the 10-day trend. Up top, we've got the S&P on the bottom. We've obviously started to curl down here in the S&P, but the key takeaway here is that we've got a good deal of room here before we get up to that 1.35 oversold area of the 10-day trend. The trend did pop up today. It went up to 2.5, which is certainly notable, and especially since that'll be in that average for about 10 days. So that's a notable development, but we didn't record a climactic reading here in the 10-day trend, so there's still some more gas in the tank before we get to that oversold condition. Here's a little inside baseball. Here's a little tip. When you get a low close and the market gets smashed, pay attention to where the trend closes, because a lot of times that'll be a good indicator of what the market's going to do on the open the next day. If the trend is high but below 3 and the market's closing on or near the lows, chances are you're going to wind up with a sloppy open and oftentimes a gap down. If the trend gets up to between 3 and 5 on an intraday basis, that's between 3 and 5 on the New York Stock Exchange ARMS index, that's when you can get that relief gap to the upside, which means there was sufficient selling done in that previous session to allow for a gap up the next day. So those are the days when I don't like to take shorts home, when we get that really high reading in the trend. The asterisk is, if things are really ugly and the trend closes over 5, that means traders are desperate enough, and the institutions, the larger institutions from the larger time frames, are coming off the sidelines, and chances are that they've got enough selling to do to overwhelm the market even the next morning. So if the trend's high but closes below 3, the market closes at or near the low, that's where you can get a gap down the next day or a very sloppy opening. When you get that trend reading between 3 and 5, that's when, and the low close, that's when there's been usually sufficient selling to allow for a relief gap to the upside the next morning. Just a little trade management tip when you're squaring your positions at the end of the day. All right, this is probably the most important chart out there right now. This is the cumulative advanced decline line. We're obviously rolling over here on the New York Stock Exchange side, but we're above the previous high in this ratio, and this breakout is still pretty good. Well, it's not a ratio, it's just accumulation. But NASDAQ side is where you really need to focus your attention. We're back down below the previous high, and we're potentially setting up a lower high here on a qualified basis in the weekly time frame. Just changed the chart to the weekly time frame. We've got potential double top in place here on the New York side, but that's not quite as worrisome here as what's going on the NASDAQ side. If we have another sloppy day on the NASDAQ side in the weekly time frame, we're going to wind up undercutting this previous low. Here's the high water mark. Here's the potential lower high. But remember, a lower high isn't qualified until you take out the previous low. So right now we are below that low, and if we have negative advanced declines tomorrow, in the weekly time frame, we're going to qualify this to the downside, and this is going to be a major technical development. The one thing you don't want to fight, like we've always said, is the cumulative advanced decline line, and the NASDAQ side tends to lead the broad market. And here's a look at the individual sectors ranked from best to worst. No surprise with the market action we had today. The XAU was the top gun. The utility index was also pretty well bid for. No surprise there. Another kind of a little defensive haven. And the consumer staples were fairly firm. The BTK index was the last laggard by a decent margin. The housing sector got hit really hard too. Some of these housing stocks have just gotten absolutely destroyed in the last 5 days or so. Hovnanian, the building company, a lot of these names are really weak. Saw some pretty good weakness today also in the Philly Semiconductor SOX index. The broker dealers were weak, and a lot of the other groups were just kind of all these other groups, the oil services, the transports, were all just kind of more or less in sync with what the market was doing. The BKX actually outperformed the market by a little bit today on a relative basis, but that could have been a little bit of a search for yield to a degree. So I'm not sure that's anything to get too excited about. But let's move on and take a look at a couple of the key charts. Here's a look at the XAU making new highs here on the move. We're in the overbought territory, but you can see clearly, just like the gold chart, we've got this cup and handle formation. We're pushing up here into the overbought territory on the Gann box. If we get above this, if we exceed this 2A's level at 106.25, we are going to wind up frame shifting this, and you can see that as of today, we're only 4 days up in the secret exhaustion run, so there's plenty of room to go here to the upside before we have to grapple with any kind of a exhaustion signal from that key study. I'm going to go right to the BTKs now, which had a pretty rough day, pretty weak. Note the MACD is starting to pick up some momentum to the downside, but we're still well above the zero line. Once we penetrate the zero line, if that's the direction we're going to take, that's when the real momentum develops. Not a lot of support here. The 7/8 level is a relatively minor level, so not a lot of support until we get down into this 6/8 level. And, somewhere in between there and the 50 DMA is where you're going to find support. So there's a lot of profits in a lot of these names, and we can see some knockout punches here. So make sure you're on top of the individual names in the BTK sector. Here's the housing sector, which has just gotten shellacked in the last week. We're obviously below the 10 EMA, and now we're below the 50 as of today's settlement. We're only 7 days down. The 4-ace level is an important level and could be strong support at 200. It's also, more or less the midpoint of this congestion area here that we had. So if we shake loose out of this 4-ace area, then we're going to put the static trend line into play here. And that's going to be pretty important support. It's also going to have some support from the seeker, which is 7 bars down. So if you just kind of go a couple of frames forward here, you would think that somewhere around 9 bars down or 8 bars down, we could be interacting with that, and that could be an important area. Note that this exhaustion level, the risk level from the exhaustion signal is still in play. Here's a look at the semiconductors. This had a really bearish day. We actually had an outside day down at range high, which is real negative. We actually touched this plus 2-ace level. This plus 2-ace level on the Gann box is really, really strong. So next support is going to be the 8-ace level at 562.5, which we already traded with in today's session. If we break loose below that, then we got to worry about this little settlement down here, this little gap, and then below that there's going to be some support here at 7-ace. 7-ace is a minor level, but we have a touch here, which is the low from this gap day, so that's going to be a little bit more important than it usually is. Below that, the 6-ace level is going to be real strong because it's the breakout from January and also the 50 DMA. To the top side, 2-ace is the sheriff in town. If we break out above that, we're going to be climbing up into a frame-shifted box. And there's actually pretty good room to the upside here because we're only 5 days up in this exhaustion run. So if they can right this ship, there's some good room up there. But for now, we do have a range high outside day down coming off of a key level. So that's probably what you should be keeping in the forefront right now. Transports were down about 1.4%. Again, another outside day down here at range high. We're going to have some pretty good support here at 6/8 because we interacted with it before, and it's also the 50 DMA. So that's going to be a pretty good level right there to watch. MACD isn't quite as overbought as in some of these other charts, but it's at the same time it's also closer to rolling down below the 0 line and gathering some real momentum. The oil services were extremely weak. Found some support today at the 50 DMA where it came into play with the 2-ace. So that's going to be an important level. Below that, the 200 is going to come into play here at about 270, 271. So that's going to be a decent level. But at the same time, we're only 3 days down here, so we could easily, if they really want to take some of the longs out, we could get down to the 0-ace level before we run into a problem with the bar count from the seeker. Real quickly, I just want to take a look at gold. Gold followed through to a small degree, but is working this 8-ace level. 1375 is going to be a big level. We did break out of this cup and handle and follow through, so that's now qualified. But just like the 200 DMA, that tends to be gamed. That's the same situation here with this 8-ace level. So don't think that this has just failed now. We have a big follow through tomorrow. Tomorrow's Friday. Might be a safe haven, and people might want some protection over the weekend. So we have kind of a bit of a measuring day today. So make sure you mark off Thursday's high for a potential long play on the gold futures. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.